Yeah, hello and welcome to another update video about Ethereum. So let's talk about the structures here, the short-term bullish and short-term bearish count. So definitely ETH shows some short-term strength after reacting here to the 100% extension, which was the ideal target for the first ideal target for the C wave down. I mentioned yesterday that obviously this is the 100% extension. You knew about this level. Which is, yeah, as I said, the first ideal target for the C wave. Bitcoin didn't reach that level. Bitcoin basically ended here pretty much, a little bit higher than that. So, I mean, the level is reached. We can be open to the idea that a low might be in. I just can't confirm it without seeing, further price data. But yeah, low could be in. Bitcoin shows the potential for a little bit of a corrective rally. But, I mean, definitely this correction was long enough. And I mentioned to you yesterday, I mean, Ether could make one more low, but doesn't need one. So we'll see if it now rallies further and gives us further evidence. I want to share with you what we now need to see, let's say believe that a low is in. So what I need to see now is a break above the next resistance area. So that's the next pivot that we have to watch. The initial resistance basically told us, okay, one more direct low has become less likely, but obviously not impossible. We are still holding below all previous swing highs. So what constitutes the beginning of a new uptrend, on this time frame? Well, we are in a larger uptrend, as you know, and it's a clear three-wave pullback. So definitely favors trend continuation as per the overall bullish scenarios. However, we need to see, obviously, now on the smaller time frames that Ether can establish higher highs and higher lows. So Ether needs to break first above the next resistances. We have structural resistance at 3,300. That should be a small one. These up here seem to be a bit more substantial. So let's add the VRVP to the chart. Volume profile, here's the point of control around $3,515. That's going to be a big one. That is, first of all, the 78.6 retracement, and it's the point of control. So pay attention to that level. That is, I think, really critical. That area needs to be overcome. So as I said, we've got 3,300, then yeah, the golden ratio level here, I don't think that's necessarily so important, 3,334. More important is this level up there, 3,500 pretty much. And then as we get above that, it will slowly start to get more probable that a low has formed in wave 4, especially if this B wave breaks above what I have labeled as X wave. So the bearish count in white, short-term bearish, tells us basically which levels need to break to confirm further that in the yellow scenario, the wave 4 has bottomed and it is eventually really this high. The B wave gets a little bit too high already, above 3,500, because B wave, yeah, surely can overshoot and all sorts of stuff, but in a WXY, it is rare that in a Y wave, the B would overshoot. It's rare. So that's why I say, okay, if we get a break, a sustained break above 3,725, which is the X wave high, that will be the earliest, the best confirmation really that we can get that the low is in. And it also depends on the structure that's forming. So if we form a clear corrective structure to the upside, it would rather favor the B wave. At the moment, it starts to look potentially impulsive, but I haven't got 5 waves up yet. But it possibly, if it extends a bit further, forms a little bit more structure, then I can tell you maybe later today, once we have the first 5 up complete, we can add a micro support area. And maybe then as we see a little bit more structure, we can then look at higher prices as long as the next micro support area is holding. For now, the last key level remains down here at 2,767. And we have to watch now these fib retracement levels together with the point of control, which basically overlaps with one of the fib retracements, actually with one of the most relevant fib retracements. And then if we can then move up further and break above the X wave high, well, that would rule out at least the white count as it is. Wouldn't rule out all the bearish potential. It will depend on the structure. Best evidence will be 5 waves up and a break above resistance, followed by a 3-wave pullback. And that 3-wave pullback then will also serve as additional evidence that a low has formed. At the moment, this could easily simply be a B wave rally. Let me just add a microstructure for that to the chart. So like that. But again, microstructures really unreliable on these time frames, as I always say. So this could be here possibly the A, small b, and we're now working on wave C. Let's see if we see a reaction then to the resistance area. If we get another, let's say 4-5 pattern, then we might be dealing here with a diagonal pattern as per yellow. 1, 2, 3, 4, 5. And then we can say, okay, if we form these 5 up, yeah, you know, then we can look at, okay, what's the next pullback? What's the 3-wave pullback? Could also be that small 1, 2 here. Okay, and this is now sort of an A, B, and it's now forming the C of 3, but the 3 should still be unfolding either way. Doesn't make a great difference. So it's still only 3 waves up, right? And then if we get 5, however, we can look at overall higher prices after a corrective pullback. If we talk about what's the minimum or the first ideal target for wave 3 in yellow, yeah, I mean, to really get a reliable, I mean, 3,425 would be ideal. So that is how 5 waves would look like. 5 waves to round about 3,500 could indicate that a low has formed. Okay, so that's what I'm looking at on the micro level. Until then, white is probable. That's my update about Ether. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.